Have you ever woke up and you're mad at your spouse because you had a dream and your spouse was ugly to you during your dream? So I wake up this morning and I'm all peed off at Beth. I'm like, oh my gosh, how could you do me so bad? She's like, what are you talking about? I said, in our dream. She said, our dream? I said, oh, yeah, like you didn't have it. Unbelievable. So I wake up and I'm all mad. It's hard for me to get over too. I'm like, she was so bad to me, y'all, in the dream last night. I'm like, you cannot treat me that way. I'm like, I need to call Judge Judy this morning. And I never not watched Judge Judy. I don't know what she's doing, but anyway, so now Beth's actually mad at me because I won't tell her what the dream was about. But I'm sure we've all been there, right? You wake up and you go, it's just realistic. And wow, what a dream last night. Just crazy stuff. I don't know if y'all dream crazy crap like I do, but boy, was it crazy. All right. So to the market we go. Hello, Ken. And
Hello there.
so sorry about your baby yesterday. I know it's hard having a pet put down. It's just a member of the family, and you're in our thoughts and prayers this morning.
Thank
Um,
you.
Jim is with us, Rick is with us, Stacy's with us, and Jason. Jason's new, y'all. So everybody say hey to Jason. Hey, Jason. Hope you're doing good.
Hey
Jason,
guys.
and Jason, keep in mind that before you listen to anything that I say, let me just preface it by saying I'm the worst trader of all times. I make all the mistakes. I'm at times a horrible person. I've been arrested in 2 states, in jail in 2 states. Uh, Fortunately, nothing trading related. Have I ever told y'all those stories? I'll save those stories for one time. It's pretty funny though. Um, Pretty funny how I got arrested in 2 different states. And that's what I always will tell boys that come around Abby, right? You know, you got a 16-year-old. I'm always like, tell y'all something. Y'all think I'm a good guy? Mm-mm. And my Sunday school class loves the stories about me and the police. Always getting aroused out of that, and especially that I'm banned from the Krispy Kreme donuts in Birmingham, Alabama, for a minimum of 5 years for a little altercation at the Krispy Kreme. Anyway, so Jason, welcome in. Hope you have a great day. All right, so trading wise, now Jason probably go like, "I'm getting the heck out of here, baby." No, it's all good. I promise. So trading wise, let's look see what the market's doing today. Now you remember yesterday? I guess I could turn on my little thing that shows stuff better, right? Yesterday, the AD advancers over decliners was in the 400, right? So a much stronger day yesterday on the market internals than what we see today. AD today is at 277. That's pretty strong. And, you know, and if any of you ever day trade, and when we do get together, that's one of the things we're going to do when we ever do get together, is we'll do a little day trading and show you how to do scalps. And you can do it on paper trading if you want to, but we'll use this little setup. AD, we look at this first, and we expect that the E-minis will follow the path of AD. And there are some naysayers to that says that that don't happen, but most of the time it does. And so when we're day trading that, we can draw a little trend lines here, see how it matches here to see if that's following it. And then I would normally trade the NQ. But since most of what I do is in the ES, I've got them loaded on both charts. Just looking at volume, great little volume indicator here. You see the very first bar basically was all buyers, right? You see the green, that represents the positive bullish volume. And then the red of each bar shows the bearish volume. So you can kind of keep up with volume. So the eyes go from here to here to here to here if you're following along. AD, what's AD doing? ES follows. We watch a couple things. We look at the cash open, which is that little white line. This is the hourly mid band, which kind of tells us what's happening every hour. So what's happening every hour? Well, it's going up that hour, it's going up this hour. So we're in a little up movement. We always kind of watch VWAP, value weighted average price, see what that's doing. That's increasing and price is above VWAP. What are these three little things here? This is the Williams alligator. And the alligator, as you can see, started opening its mouth. And what is it doing? It's going bullish, 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 bullish. So what are these? Those are fractals. Just kind of shows little pivot points there in the day. So you can look up on those. Do I use them for what I do in my options trading? Not really. I just would normally use this if I'm ever scalping futures. If you're scalping futures, please, 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 if you don't know what you're doing, kind of like me, then don't do them in the E-minis. Change it to the micros and then scalp your micros. Anytime you need to hedge in your account and you're looking at your deltas, and let's say you got positive 600 deltas, SPY weighted deltas in your account. If you wanted to neutralize that, you could sell one E-mini future, sell a future. That'd give you 500 negative deltas, right? So that you would then be positive only 100 deltas. Now, what if you wanted to sell or utilize the micro futures? One micro futures / MES is 50 SPY weighted deltas. So you could, if you wanted to just do a little there, you could do one contract and have 50 negative deltas, short one contract, short two, you'd be down 100 delta. So that's how you use futures to hedge. We sometimes use futures to scalp and to do different things. Also, you'll see this blue line, interestingly enough, if memory serves me correct, was the overnight high. So what's happened today? Didn't take long before we busted out of the overnight high. Now we're above that. The graded shaded area here is the opening 15-minute range. I always like looking at the opening range, see what happened in the opening 15 minutes. And you see since the opening 15 minutes, it's basically gone up. It's tagged the opening range again, tagged it a second time, and now it has busted out again. Will it come back to it? Probably so, and keep on busting out. So we really don't know where market goes, but we place our bets accordingly, right? So let's see. The other thing that we follow is volume profile and market profile, and we've kind of got a cool little way of showing that together. Jason, for you being new, you probably haven't seen this yet, but once a month we draw these little levels that show us where price is, whether it's in a fair value range, whether it's oversold or overbought. And right now, you see that it is in this fair value range. How do I know it's fair value? Because I see this little dotted line shows me a 50%. So yesterday, price was in this fair value range. Look, interestingly enough, what does it do? SPY goes to the 50% line and then bounces up out of the fair value range, and then it becomes overbought, right? Overbought, but it said I'm ignoring that, and then it comes to this little level between the 0 and the 20, which is an oversold level. Then it responded accordingly from being oversold. Check what it does. It goes back and forth as if it's making a decision. It's almost as if price has said, hey, wait a minute, Bobby has drawn a big green monster here. So we got to make a decision. So price percolates up and down among the being oversold in the fair value range. And then it makes its mind up and says, hey, I'm going to go back to the point of control. What is the point of control? Point of control is this red line. This is where price has traded the most volume, the most number of contracts over the last 10 days. And that's about as far out as you and I can try to project where price is going to go. So where's price? It's here. Where is it likely to go? Well, it's probably likely to stay in the 50% range area. Would not surprise us at all to see us tag the 435 line. Why? Because that's the 50% line. When's it going to do it? Well, we don't know, but we figure that it could probably do it, maybe tomorrow, maybe the next day. So, you start using these things and you start thinking to yourself, well, maybe I can lay out some butterflies, right? Maybe I could put a butterfly, you know, position it at the 435, put it on pretty cheap as a lottery play. Now, I don't do a lot of those, but you can certainly do those. And I apologize, y'all. One of my dogs is scratching to get in the house, and JoJo and I are the only ones here because Beth took the rest of them to get their hair cut. I need my haircut. JoJo, will you let JoJo's down here with me? My son, my 6-year-old son, he's gonna let the dog in so you don't hear the scratching anymore. Yeah, let Sadie in. So let's just kind of look. We don't do a lot of butterfly trades. We do broken wing butterflies, but it'd be kind of interesting, wouldn't it, to just kind of see if we could set up maybe a butterfly and something. Oh, another thing you can do too is you can open these things up in anything, right? So I've got a number of stocks that we're owning in the AIM portfolio. So you could open them up in anything, right? So we've got the Realty um, thing, which is bombs away as far as that goes. Let's see what else we got. Let's look what else we got. TQQQ, you know, everything above the 20, the 50, and the 200 moving day averages on a 10-day, 30-minute chart. That's at the point of control as well. Let's see if we look at a couple. What is our oil product doing? UCO. Look at UCO, y'all. UCO is perfectly priced. It's in a fair value range. It's above the 20 and the 50 exponential moving averages. It's below the 200 simple moving average. Where is price going on oil? I'd bet you a dime to a dollar we're going right there. Bet you a dime to a dollar that we're going right there. And oftentimes I don't use options on these underlines that I have. As Stacy and I talked about last night, these are thinly traded options, but they're fine if you want to, trade them on a, as far as shares, they do okay. So look at that. It's up 7% today. So we also have the AIM portfolio going, don't we? So the AIM portfolio, I opened it up this morning to see if we get any triggers. Great thing about this, and I shared this spreadsheet with you, is a simplified spreadsheet of the one that I was using. But for the next 6 months, I said I'm going to trim it down. I'm going to spend more time with the family. I'm not going to do as much updates in my portfolio. So I want the laissez-faire, if I pronounce that right, approach to portfolio management. So I'm going to let AIM take my portfolio over for a while and see how that does. And we're comparing it to the other portfolio that I manage, which is in the BAME. So the BAME is the Bobby automated investment management, up $534 today, up $7,200 since we were up $8,000, right? So we took a little down hit with the down move in the market, so we're fine. And this account opened in March 26th of 2021. So $35,000, up $7,000 since March 26th. That ain't bad. That ain't bad at all. So, can AIM keep up with BAME? We don't know. We don't know. And we'll show both. Tomorrow's our BAME day where we'll actually update BAME, and I'll show you all about BAME. So don't worry. Where we actually, put in 10 different data points to tell us where we think price is going on each one of our 12 underlines that we have in the portfolio. And from that input, the algorithm that I've developed gives us a suggested percentage of your portfolio. So right now it's saying that looks like TQQQ, the leveraged NASDAQ, should be the primary instrument that I'm holding, whereas something like ULE should be only 5% of your portfolio. This should be 11% of your portfolio. So it's telling me to buy one share of this, sell a couple shares of that, sell a couple shares of that, and kind of a neat little way to run a portfolio as well. What's better, BAME or AIM? I don't know. That's why I'm doing a comparison. And the good thing is, I'm willing to compare and contrast because I don't like paper trading. Why? Because I used to be big on paper trading. And man, I would treat it like it was the real thing. But what I found out was that the feels and slippage was not exactly the same as real money. So, I'm not gambling with my kids' lunch money in using this real money account to test what does well. And so I'm willing to do that. As I did say yesterday, I did start the AIM over in this account. In other words, y'all saw me, I've been using BAME in this account, in the primary account. So I said, well, it's not fair to penalize the governor decisions that BAME had made in this account. So I went in and just started it all over. In other words, I had 133 shares of this. What was the price yesterday? It was 27.12. And I just said, that I started it over. Also, as Stacy and I discussed last night, cool thing is you can, if you want to reset your BAME or your AIM or BAME at any time, you can do that. So beginning of the year, you say, we're going to shake it up. I'm going to get into 12 different underlines, or I want to do 15 underlines. You can shake it up at any time at the beginning of any month or the beginning of any year. Just shake that up, management. So by the time that all of you get finished with me, you're going to be portfolio managers, because that's what I want you to do. I want you to come out going, man, I'm a portfolio manager. I know how to basically use any type of trade to make adjustments. I got all different kind of strategies that I can use. And then you kind of migrate to those things that you really, really like. Rick has migrated to the Rick trade. He loves it so much that we named the trade after him. SPX put credit spread, sold every Monday, Wednesday, and Friday for a 2 to 3 day expiration. And he's done really, really well with that. And he's incorporating the Black Swan hedge as well. So, that's what we're trying to do. We're not trying to teach you that this is the only way to trade. We're trying to show you that there's multiple ways to trade. And you got to find out something that's comfortable for you in your portfolio. Because are you a portfolio manager? Yes, you are. If you've got an account with $1,000 or $2,000 in it, and you say it's not a lot, you're a portfolio manager, and you need to know how to manage that portfolio. Yeah, Rick, were you saying something?
Yeah, I just wanted to ask a question. So, I mean, with BAME or AIM, how much of your account is left in cash? Because don't you put a lot of the, I mean, if you hold out 50% cash and 50% options, don't you put a lot of that cash in the BAME or AIM?
Yeah, so with AIM and what I'm doing in this account, so let's pretend that I don't have any options trades. And that's what this actually pretends, right? This AIM dashboard. So right now, AIM thinks that 78% of my account is in AIM stocks, which it is. Okay, 78% of my net lick in this account is in these AIM stocks. So I have a total stock value of $38,666. Oh, change. Get off that number. There you go. $669.02. So right now, AIM is saying that my stock is 78% and I have 22% in cash. Now, what AIM doesn't know is that with that 22% that's in cash right now, that I'm using part of that to do some options trades.
So you have a large part of your account actually in the market, and the largest percentage of that is in your BAME or AIM, correct?
Yes.
Got it. Thank you.
Yeah, good question, Rick. And anytime y'all ever have questions, sure enough, just shoot it in, chat, talk. That's fine. I love y'all talking. So that, I mean, is that a winning combination? I don't know. Lacello in his book, How to Make $1 Million in the Stock Market Automatically, which is the worst title that you could ever title a book, because nobody's going to read it because they think it's garbage. He originally proposed starting with 50% in your stocks, right, and 50% in cash. Then he later revised it. He said, I think you can do it well with, 80% in your stocks, 20% in your cash. So that's about the allocation that I have. And I'm looking, I like looking daily. I like the action. I like looking here daily to see if there's a trigger. This thing will automatically tell me whether to buy or sell. Y'all saw it earlier this week. It made a great call on UMDD. UMDD, the mid caps were down over 5% in the day, and AIM told me to buy 5 shares. So we bought 5 shares. And that was a great, great decision, because UMDD, after I bought the 5 shares, what did it do? No, it doesn't know, right? So it may go down more. If it goes down more at some point, AIM's going to tell you to, buy some more. But down here, AIM said buy 5 shares, and I bought 5 shares. And so that was a good move, right? The cool thing about AIM is that AIM, you're not really going to have any wash sale issues. Now, you might have wash sale issues if you use Bain with a B. Why? Because you're going to be closing some things at losses. Cool thing about AIM is you really don't close anything at a loss. You're always taking profits in AIM. So you got a smaller account, you don't want to have to worry about wash sale rules, because wash sale rules can eat you up. They're, stupid, archaic rules that were put in place so that people would not sell shares at the end of an accounting period, so that, and then they would close them, take a loss on it, and then for tax purposes, and then on January 2nd, they buy back into the stock. So they try to take the cash loss and then buy back into it. That is not what we're trying to do with Bain, but the IRS is going to penalize you for that. So how do you overcome that? Well, now this is beyond the scope of what I'm good at, okay? But you got to either have tax trader status, or you've got to elect mark-to-market accounting for your account so that you avoid the wash sale. So what is mark-to-market accounting? Well, that means that basically, your profits and losses are basically, on your net lick. You're taking, whatever your losses are on your net lick is the loss that you're taking, rather than the actual realized profits and losses that you're taking on your, the actual trades that you make. So, what can I say? Book you a 45-minute session with the Green Trader Tax. Search Green Trader Tax, book a session with them. Cost you a couple $100. It'll be the best $200 that you have spent in your trading career if you're interested in that. So, this fund that I do it in is mark-to-market accounting, so I don't have to worry about wash sales and problems like that. But that's something that you need to be aware of. So if you don't want to go and explore how to do that and how to mark-to-market or tax trader status, then the easiest thing would be to run AIM, because what AIM does is it books profits when things go up so that you don't have a loss, right? And it doesn't, when things go down, you're not booking the loss, you're actually buying or accumulating more shares, which is a really, really cool thing. Now, you think, man, Bobby, you can't do anything in options then if you've got 78% of your account in these stocks and you're just holding shares. I got 706 shares, y'all, of stocks in this account. Oh, yeah, you can. Basically, I can do anything I want to. I got plenty of buying power to do Rick trades and short puts in the micros, broken wing butterflies, whatever it is that's out there, and to do the black swan hedge. The problem with these leveraged items is you're going to get big moves. And on Monday, the AIM account was down, like $1,000. The cool thing is, check this out: the overall profit and loss since I put these things back in on the 19th, so 2 days later, it's up $1,474. And follow along right there. So, I was down 1,000, but now I'm up 1,400 on it. So these things move, and that's what you want for AIM. You want big movers so that you can buy and accumulate shares. So if you had something that was a slow mover, what would be a slow mover? Well, that would probably be junk and these two, what I would consider cash equivalents in the account. Initially, I was not going to run these on the AIM program. I was just going to simply park cash in these two. But then it just made sense to say, well, that pays me a monthly dividend, and junk, which is basically a bond fund, I'm going to actually put them into the program as well. And so if they outperform or do well, I'm going to sell those shares and book the profits. If they go down, we'll buy or accumulate more. Other than that, I've just got cash parked in the two, right? Now, and I'm throwing it into the AIM, but actually, in my opinion, these are cash equivalents as well. So, but I run them in the AIM program. Now, if any of you want to get this started up, then please send me a message and say, hey, Bob, can you do a one-on-one with me where we can set this up with your account? And we can do that. So, you may need just a little help getting it set up, but then you're pretty much on your own, baby. And this thing is so awesome because you open it up and it brings in the stock prices from Thinkorswim, right? It uses the data there to pull that data in and then to make your decision. So if you want you're working a full-time job, you want a program that will tell you something that's better than buy and hold, right? So you're a buy and holder and you go, man, I'm going to buy Apple. I'm going to hold Apple till the cows come home. And then Apple has a severe correction at some point, things happen. You instead of being a buy and holder, it's going to tell you to sell shares as Apple goes up. And as Apple goes down, it's going to tell you to buy shares, which is kind of cool, right? Buy low, sell high. That's what AIM does. And that's the algorithm that I programmed into the spreadsheet to help you with that. So when you get set up, it's as easy as going to your AIM activity, choosing your initial stocks that you want to buy, pretty much saying, hey, I'm going to put, whatever percentage of your account, 80% into it. And then you can figure out the number of shares of each one that you want to, put into your little program here. And it keeps up with the streaks, how many buy orders have you done in a row? How many sell orders have you done in a row? And then I've placed a governor in here. Sounds like a politician, but it's not. It's kind of like the Talladega, Alabama, restrictor plate race with NASCAR, where we say, okay, listen, if I've bought 3 times in a row, okay, so your streak would be B3, then it's going to put a governor on it to slow it down. And the purpose of that is I don't want you running out of cash the more buy signals in a row you get. So if you get a buy signal and it says buy 5 shares, then the next signal you get is buy 5 shares, and you get a third signal, buy 5 shares. Then all of a sudden you're using all your money to accumulate shares. But I have built in a governor to put basically as a restrictor plate to slow your car down so that your subsequent buys will not be triggered as often so that you preserve cash. Because when you've got an allocation that is 78% stock and 22% cash, you don't want your 22% cash going to zero. You don't want to run out of cash because you always want to have some in in your some dry powder to place it into something that's going down. Now, will this work? I don't know. I think so. I think the governor that I have is pretty good. We'll see how it works, and I can make tweaks accordingly. So then I've built a little visual representation that shows you what you're actually holding, right? So, our maximum thing is we are in UPRO, which is the leveraged S&P 500. We're in the leveraged NASDAQ, and we're in the mid caps most significantly. What do we not have a lot of? We don't have a lot of ULE. We don't have as much of URTY and ugly and UCO. So this is gold. This is oil. So we've got mid caps in here. We've got some treasuries in here. We've got some silver, Russell, got all kind of things. We got some bonds. We got some real estate. So you got a pretty diversified portfolio, and then we're just throwing it to AIM to make the decisions. That's really cool, right? Is it going to work? I don't know. How's it going to do? I'm your guinea pig. I'm your guinea pig. I got you. All right, so let's go back to our little thing. What were we doing? Back to this. So yeah, you can check out anything, right? So let's go back to SPY. Well, let's look at the ES first. Recent ES. Let's see how that looks. Probably looks a little different from SPY. because ES has overnight information that's fed into it and everything. But you can see pretty much above all three moving averages, going to the point of control. Where is it likely going? It's probably going here, isn't it? We see that. It spent a lot of time here. You see this little, even though this is where the most volume has been traded over the last 10 days, look at this. This is nearly equal to this. This was a little bit more significant, but I anticipate that these little gaps will be filled somewhere and that price will go back up here. So what am I for the next week? I'm bullish. But let me preface it by saying this, y'all, on Monday, why was the market down on Monday so big? Wasn't Monday the big day that we were down? That was because I think investors, traders were thinking that, oh my gosh, this Delta variant, I'm glad they're using the Greek names to name our, our diseases and plagues out there. That makes it feel good for an options trader. So the Delta variant is increasing. Then we got hospitalizations increasing. Will we have another shutdown? Well, maybe. So let me preface it by saying that on Monday, it was a big deal. And then what happened on Tuesday and Wednesday? We got people flying into space again, right? We got Bezos going into space in a penis-shaped rocket, and now it's like the whole investor trading world's got ADHD, and they're going squirrel. Oh gosh, we're all going back in the hospital. COVID's going to kill us all. Squirrel. Dude's going into space. So dude goes into space, and then we forget about it. Everybody's going back into the hospital. So how long before the attention now goes from, Amazon billionaire going into space to, oh my gosh, we're all going to die from COVID. So you got to keep that in mind, that that's in the back of everyone's mind. So when I'm sitting there saying that I'm bullish over the next, few days, keep that in mind, that we have that in the background. It's just a matter of time before people go, we're going back into the hospital, and they start thinking about that again. As long as we got news to the contrary, they'll forget it, and the market it'll keep going up. But with that said, the day is coming. There will be a day of reckoning again, when you're going to have a 20 to 35% drop in the market. It is just a matter of time. You cannot sustain what we have going on for a long, extended period of time. Now, the cool thing is we can sustain it longer than we have funds. So you can fight the bull market all you want to. You can sell calls all you want to. You're going to get run over to the upside. You're going to lose a lot of money. How do I know? Because I fought it for way too long. And finally you say, gosh, let's just go with it, baby. Let's go with the bull market. Let's go. Let's make some money. Let's be up. Let's make $602 today. That sounds good, baby. Let's make our $600 today. Let's go with the bull market. And that's what I'm doing. But at the same time, what am I doing? I'm hedging my bets, right? So I'm hedging my bets. Let's see. This is ES. Let me see what I got here. Vol steps. Let me select all. All groups, portfolio beta weighted. Okay. So you look here and you go, this is my portfolio. Let me hide simulations. So it just shows positions. Okay. So you go, oh my gosh, the market goes down 20%. Bobby just lost $30,000. Gosh, that looks horrible. Well, yeah, that looks horrible. But the problem is it doesn't take into effect, these price losses don't take into effect unless you change it down here, volatility. So what I do is I run it over here. I run this little scenario to show me what happens in a 20% down move with volatility going up. So here, if you've got volatility going to 62 to 77% on a 20% drop, which is I think likely would be the volatility levels. So on my portfolio, I'll be up $8,000 to $29,000. It's kind of cool, right? Well, let's take into account, let's take BAME or AIM out of the scenario and see what we'd be at. So let's take out that. Let's take out junk. Let's take out O. Because the cool thing is, if all of that stuff tanks at the same time, let's take out the RIC trade. Let's take out TQs, all these other deals. UCO, UDOW, ugly. ULE, UMDD, UPRO, URD. We'll leave VIX in there because that's one of our hedges. All right, so now this should be a portfolio that basically has my short puts in the micros. It's got all those. It has our ES trades, right, which are Black Swan hedges and a couple of space trip trades in there. And what else does it have in here? It's got some more Black Swan hedges. Okay, cool. So let's see what that looks like. So this includes the micro puts. So then you go down 20% with a 62 to 77%. Follow these numbers right over here. And you are up 26,000 to 48,000 on the account. Sweet, baby. So now let's do, instead of portfolio beta weighted, let's do single symbol. Well, what symbol is it? Well, it's ES. So in your ES trades, this takes out the micros. It has our space trip trades on there, right? So what does this do? This gives you, well, you're up 40,000 to 63,000 on a 20% drop. What if you go down 35%? Well, maybe it's sweet. So let's say that you're going, well, hey, Bob, I don't have all that in there. I just want to do the Black Swan hedge. I don't want to have the space trip trades in there. Okay, we'll take out the space trip trades. What are the space trip trades? Those are things that don't hedge against Black Swan. So all of that's Black Swan hedge. Let's take out the space trips. We got two of those in. That would be this 10, 10, 7, 7 and the 10, 10, 6, 6, 10, 6, 6. Now, so let's say that you have decided, Bobby, all I'm going to run is the Black Swan hedge. I'm gearing up, baby. I'm ready. I'm ready for the Black Swan hedge. So you go, okay. So then you're going to be up between 53,000 and 77,000 on a 20% correction. Sweet, right? Especially considering the fact that you're putting these Black Swan hedges on for free. You're putting these on for free or credit. Well, how am I able to do that? Well, remember, I did buy 4 complete tranches. Cost me a couple $1,000s. And I told you when I did that, guys, there is a chance I'm going to lose every bit of that if we don't have a crash within that 78 days or whatever it was that we put those on. So let's look at it. All right, I'm down $720 on that trade. But I have used this trade to allow me to comfortably start selling other Black Swan hedges. So we go to this one. This one's up $262. Now, the crash hadn't happened, but I'm up $262. I mean, you could close that and say, hey, baby, let's take the profit. BSH5, what's it doing? Again, this is another completed one. It's up $227. Well, you could have closed that one and taken profit. So you start legging into these things. And here's one that's complete, up $212. And if you put them on, you sell your shorts for, let's say, $3, and you buy your loans back for, say, $1.50 or, $1.35, you start putting these things on for income. So let's go to the Black Swan hedge. I've got it here. And again, I got to make it where you guys can get all of this. Let's look at this. Yeah, so hedges, let me go to the calculator. So if you can sell your 3 shorts in the Black Swan hedge for $3, and you harvest those shorts at 20 cents when you can, and then if you buy your longs for, say, $1.50, you can put that entire trade on for a $25 credit. That doesn't sound like a lot of income, does it? I mean, if the crash doesn't come, you make 25 bucks. So what happens if you start putting these on for $1.35? Well, now you got $62. So you start selling these when you can get $3 or more. You start buying these when you can do it at $1.35. You harvest them at 20. So you've got a trade now that makes you 60 something dollars. Now, is there a chance that while you're in that trade, that trade's going to be up $200? Yeah. Is there a chance it's going to be up $300? Yeah. Because I basically put all of mine on for break even. You say they're up $200 or, $250. So there's a chance of that happening even when, you put it on for a credit of $62 if you have a good down day. So if you get a down day, those things and volatility increases, those things start going up. So then you got something really sweet on your analyze tab. So if you've got something, and let's say you're just running the black swan hedge. So this is you, baby. So if the market goes up, you're going to make money. If the market crashes, you're going to make money. Are you now comfortable selling some micro ES puts? Sure. Exactly, right? You're a little comfortable doing that. So you go to your monitor tab and you say, yeah, I can sell some puts because that's what we like doing. We like selling income. So let's say micro short puts. So, we were down, $500 the other day. And in 2 days, we're up $25 on the whole trade. Isn't that cool? So you can start putting one on a day, taking one off a day, putting one on, taking one off, or however you want to do it. Or let's say you want to do the 50% management like Tasty Trade does. We've only been in this trade, 2 days, and we're at 45%. You actually should book that. Right? You should book that profit. And so if you want to sell one today, you go, well, can I? Well, of course you can. Because you go back to your Analyze tab. In the Analyze tab, put it on, your entire portfolio. Portfolio, beta weighted. Let's put everything in there, all groups. That'll take our line down a little bit. So if you get that volatility lift, you're going to be up $8,000 to $28,000 on the end. So could I sell a short put today? Well, absolutely. How do you know? Well, you go to your trade tab, you go to MES, and you go to, we were doing this last night, closest to 60 days without going over. Let's say you go in here, you're going to sell a 10 delta put, right? 10% probability of in the money. Whereas we were getting $16 for these. Now with increased volatility, you're able to get $19. So you put that in there and you go right click and you go analyze trade. Analyze trade, portfolio beta weighted, hide simulations. Now you want to hide positions. Let's just make sure that's the only thing we have in simulation is that one little put. Let's see what all we got here. Aha, I got 2 of them, right? So I got to take this thing out. Just make sure I got the one in there. So if I took this one off, would that be, yep. So it goes to a flat line. So now we've just got selling the one put for $19.25. So now you can put that baby back in there. Then you go, instead of hide positions, you're going to show all because this will show my entire portfolio. And then I'm looking to see, if we got the crash, would I still be okay selling that short put? So I'm up 5,000 to 25,000. All right. So what would it be? 5 to 25 with the short put. Hide that simulated trade. What would it be without it? You're 8 to 29,000. So this helps you to make the decisions. Keep in mind, I didn't use this at all in so many years of my trading until Karen, the super trader, says, I live on the Analyze tab. So when she said she lived here, I thought, man, I better spend a little time learning this thing as well. So that's what we do. So could I sell a put today? Yeah. Hey, but Bob, you don't sell puts on an up day, do you? Well, sometimes I do. Why do you? Well, because sometimes I'm looking at this chart and I go, what's ES going to do? Well, ES is at the point of control now. What is it likely to do? Is it in a fair value range or is it oversold? Well, that's MES. Hold on a second. Let's go back to ES. Well, it's fairly priced. It's above all 3 of its moving averages. It is just below its point of control. It has touched the point of control today. It's likely to go back to the point of control. And not only that, price is likely to go to the 50% line at least. So see the volume that's traded there, almost the same that is traded here. So this is almost the point of control. Let this get up to here and it will be the point of control. It'll be fairly priced at the 50%. So see how you start using the big green monster and other things to kind of make your decision. So now it doesn't look so bad selling a put on an up day, does it? Because you go, it's fairly priced, it's in the lower range of that, likely to go here, could actually go here. Wouldn't surprise us at all. Now, keep in mind, if the world starts thinking COVID's going to put us all in the hospital, though, you got a problem going back down to here. But what happens? We saw what happens. When this goes down, those black swan hedges have not been fully activated, but they're generally up. So you got to depend, you look at the market and you go, what am I feel comfortable running right now? I definitely feel comfortable running the black swan hedge. I definitely like having the VIX hedge on, right? We got two hedges running at the same time. Let's sell a few puts. I got the AIM going on. So I think I'm good. Because AIM loves price going down. AIM loves when things drop out of the market. So you're down $2,000. Hey, on your account, don't fret because AIM's telling you to buy more stuff. That's cool, right? Because you're buying at a better price. It's really kind of a cool concept when you start putting everything together. And you think how all of these things work in harmony together to do good things in your account. Now, have I tested all this? Do I know that this is going to be the end all of end alls? No. I'm in a live experiment right now. We'll see. So far, so good. I like the prospects of AIM. Stacy and I were talking last night. It's hard to read that book because that guy is a little bit on the weird side. He is a little strange, y'all, and especially when he starts talking to himself in the book. And you'll kind of go, okay, this guy's a nut job. And then when you look up the commercial he did in the 70s for his book and his program, then you'll really think that old boy's cheesy. And then he goes, I'm going to give it a cheesy title as well. But you really do need to read the book to kind of get the full effect of what we're trying to accomplish with AIM. So it's really good. All right. So Jason and CD, y'all are new here, right? So what I would do is, kind of look around, look at the YouTube videos that we've shared. If you got any questions, we have some of the greatest traders in here that are willing to help you. Jim and Stacy and Rick and Ken and Matt. I mean, they know exactly what we're doing, what we're trying to do. Reach out to them. I like y'all having conversations with each other. Send me a message. We can do one-on-ones with y'all to try to get you set up, look and see what your experience level is. Because ultimately, I want everybody to be successful. And it's so sad that we live in a time when we don't try to support and help one another. So, so many times we're going, oh man, I'm going to see if can be the best trader on the planet and screw the rest of you. And we have that type of mindset. It's a horrible mindset, but it's the mindset that so many traders have. So when you finally try to find a community that wants us all to be successful and all, support one another, it is a little unusual. And you probably must ask yourself, why on God's name would someone do this? And some of us have the spirit of a teacher. I'm not saying I'm the best teacher on the planet. I'm certainly not. But I think I have the spirit of a teacher. I'm grateful for what I've been given in my life. And that's why I started thinking, I do not need y'all to pay me $50 a month or whatever amount per month, to feed my kids and to keep me going. I've done well. I've made good decisions. I'm at a place now that, I'm set. I mean, I wouldn't say that I'm not Bill Gates by any stretch of the imagination, but I'm doing well. Retired at 51, actually retired at 50. Now I'm 51, 5 kids. All the colleges are taken care of for all the kids. I made some good decisions. I was at a good job where I put away money, lived beneath our means, still live beneath our means. Not driving a Porsche. I'm driving a 2015 prison van. that loads 12 people in it so I can get my kids and their friends into their, football game. So that's what we do. And you start realizing that it's not the money that makes us happy. Money can't buy happiness, but the lack of it will sure make you miserable. I've been there. So, we're not so much focused on the money. Hopefully I'll spend everything before, I pass away and, leave my kids with nothing, but hopefully we'll leave them with a little bit of knowledge, though none of them have wanted to pick it up yet, of how you can trade and invest and make good decisions through life, live, beneath your means, not go into debt over your cars. Oh, I got a great new sports car. I went into debt $50,000. Well, you're an idiot, right? Well, not necessarily. If that's what you want to do, and that's how you want to get by with it. But I'd much rather pay cash for a 4-year-old vehicle where the depreciation's already down, and spend my money on other things like a little trip to Myrtle Beach, for example, with the family. So, it's more about time and what we can do rather than how much we make. So it is my pleasure to kind of, in any way that I can, though I'm the worst trader on the planet. Y'all seen that. Rick Trade, he's been, he's only had to roll 6 times. Only 2 of those times would have lost money if he just held on. Bobby goes in the first day, and the first one does good, and 2 days later, the whole market just drops to crap, right? And I can't roll my Rick Trade, and so I have a big loss on it. Not a max loss, but a big loss. So my timing is terrible. But even as bad as I am now, I'm not as bad as I once was. And I believe I'm at a point where I no longer blow up accounts. The thing may blow up tomorrow. If it does, good. It's not my kids' lunch money. Okay? So that's why we're reaching out and helping. I don't want nothing from you. I want you to be a community of good people. I want y'all to do the same. And the good thing is y'all are doing the same because y'all are talking. Smitty is talking with Rick, and Matt's talking with Rick, and y'all are all reaching out to each other, and that's what you should be doing, right? So we can all help each other. Because if you're on Elite Trader and you go and post something, then you're going to have an a-hole like Des on there who is God's awful and everybody thinks is the God of trading. He's an a-hole. And I'd rather go through life being somebody that tries to contribute good, help others, than to be an a-hole and just put everybody down. But you're enamored because, he speaks in languages that you don't understand. Everybody thinks he's smart, but yet the guy won't show you a single trade that he does. And that's why Des had to pay me $1,000 on a bet because I called his bluff. And he said, "You're lying." I said, "I ain't lying. I'll show you on my system." Logged into my system. He said, "Oh, you're right." And I got to say, even though he's an a-hole, he was a man of his word, and he paid $1,000 to me. So I wasn't lying, Jack. I was truthful. All right. So good session today. We talk about life. And the thing is, y'all, I've got my account now in laissez-faire mode. I'm letting AIM do the work, right? AIM is working. AIM is telling me what or what not to do. So I kind of go in and let it tell me, "Hey, dummy, buy or sell." So I opened it today and it doesn't tell me anything. So I don't do anything. So what might I do? I might sell a put today. May not. JoJo and I are about to go see the band director and, see how band camp's going. And then we may go to the pawn shop and we might look at pistols for a while, Right, JoJo? Isn't that what we're going to do?
What are we going to look at again?
I said we may look at pistols.
What's pistols?
Pistols is like a gun. In case somebody breaks in on us, we'll shoot them. All right. Thanks for the invite to the group, Bobby. I'll definitely reach out on Discord for help on getting started after this session. I think the concept of AIM is super cool, and the spreadsheet is very well made. Awesome, Jason. I appreciate that. And, I've got several versions of the spreadsheet. We've got the one that we were using earlier this year, and that's fine too. I mean, it's cool, y'all. I mean, experiment. I love experimenting. I love pivoting. I love changing. I love doing all this for, the purpose of science and making you and me better traders. So it's really, really, really cool. And y'all, please reach out to each other. And I just put a thing in Facebook the other day, said, "Hey, we run a room and it's no charge." And then we get over 60 people signing up for it. 99% of the 60 people will never take advantage of it, right? They'll just never, they won't care. They'll be in the room and they won't participate. So the fact that Jason and CD are here today, I mean, that shows me that, you know, that you are at least experimenting and willing to learn. And I promise you, you'll find a good group of people here that will help you and support you and help answer questions at any time. That's what we're here for. Doesn't mean we'll have the right answers, but we'll help you with as much knowledge as we have. So, you know, it's a good group. All right. So reach out to me and we'll certainly help you. Am I doing any trades today? That's cool, right? I wake up, the account's up $500 today and I ain't got to do anything. AIM's telling me not to do anything. I might sell a put, I might not. I'm about 50% on the one that I sold Monday when the market was down so much. We're at 45% on that one. You know, I may book that one. That's probably the only trade that I will close. We'll wait until this one fills on my Black Swan hedge. And oh man, all of us should have sold 3 more puts on Monday, right? For the Black Swan hedge. We've already filled the loan on that one by far. And we'd have another tranche of that already going to protect us in the event of a crash. All right, so good session today. I wish you all luck in your trading, and I will see you tomorrow.